Yeah, hi. I'm Gautam Dalmia from India. Sirs, if I were to take you back to the start of your investing careers, I assume it would have been harder for potential acquisition opportunities to come by. The question I would like to ask you, sirs, is how did you ensure then that you had good enough deal flows coming to you to be able to choose from? I have one more question. The Berkshire subsidiaries do not have a retirement policy. What are the implications of this on retaining and motivating employees who are potential successors to senior management?
First question about deal flow, which is not it's a term I actually don't like very much because we don't think of them as deals exactly. That has a little too much of the connotation of something to be bought and then again something to be sold. But we do like acquisition opportunities, and really that's just achieving that so that we get the calls when we should get the calls. And there aren't lots of those because we're talking about good-sized businesses. We're talking about owners that love their businesses, and it's going to happen occasionally, but it's going to happen a few times a year probably. I think in the U.S. now that we get a pretty reasonable percentage of the calls that we should get, and that was not true 20 or 30 years ago. We didn't hear from anybody 20 or 30 years ago to speak of, because we were looked at much more as being a marketable securities operation, and we weren't as well known. It feeds on itself, obviously. If we acquire companies and the people from whom we acquired them are happy about the deal, we're going to hear from more people. We bought our first furniture operation in 1983. That really led to 4 other transactions because the people in the first one were happy and they talked to us about the second one, and the people in the second one were happy, and so on. So, it's like Charlie always describes compound interest as being like, being at the top of a very large hill with wet snow and starting with a snowball and getting it rolling downhill. And that's a little bit like the acquisition situation works. We've been by being around 38 years, it's been a high mountain in terms of the length the snowball is going. By now it's going at a pretty good clip, and it's pretty good size, and it tracks a lot of snow. And that's good for us. Outside the United States, we do not seem to be on the radar screen, so we don't seem to hear about those as much. But we're hearing about enough in the United States. It's not a flow in the sense of I don't hear about one a week. I don't probably hear about one a month. But the ones we want to hear about, most of them, I think we're getting the calls now. I think we're getting a higher percentage of the calls now than ever in our history we would have gotten. And that's all to the good. And if we can do the same thing outside this country, that would be a plus too. But this country's a big market, and we'll just try and spread the word further. And Charlie, what was that other question?
Well, he talked some about deal flow, and there's a general assumption that it must be easy to somehow arrange things that you just sat behind a desk and people brought in one wonderful opportunity after another, and you finally selected 2 out of 100, and it would be a virtual cinch. That was the attitude in venture capital until the last 2 or 3 years. We didn't have any of that in the early days, right, Warren?
No, that's right.
We were finding our own securities, and we were just looking at the public markets to see what was available in securities. And when we started buying companies, there must have been 20 years when we didn't buy more than 1 or 2 a year.
Yeah, they were fairly few and far between, and we didn't have the money to buy very big ones either. It was a big deal when we bought Associated Cotton Shops for what in effect was $4 million, or when we bought Hochschild Kohn when we had to come up with $6 million of equity, as I remember, for that deal. And National Indemnity itself was 7 million for national indemnity, and I think 1,400,000, 1,700,000 for national fire and marine. And I mean, that was all we could handle in those days. So the snowball is, it's built up as it's gone down the mountain, and we hope there's a lot of mountain left and a lot of wet snow, and we're looking for it.
But it's fair to say that we were rooting around for those opportunities. We weren't sitting behind our desks and waiting for some commission salesman to come in and present us with opportunities to sign our name. I can't think of anything we bought in the early days that way.
No.
Warren, you chased down Jack Ringwald. Didn't you go to him?
Well, Jack Ringwald, who ran National Indemnity, and some of you here in the room knew, Jack was a very interesting guy and a friend. And Jack, for 15 minutes every year, would want to sell National Indemnity. Something would make him mad. A claim would come in or something of the sort. So for 15 minutes every year, he would want to sell. And I had a friend of mine, Charlie Hyder, who may be here today, and I had discussed this phenomenon of Jack being in heat once a year for 15 minutes. And I told Charlie, if you ever caught him in this particular phase, to let me know. And there was a day that Charlie called and said, Jack's ready. And I said, well, get him over here. So he came about 11:30, and we made a deal in that 15-minute zone. And this is absolutely true. It's a fascinating story, because Jack, having made the deal, and we really did make it in 15 minutes. Jack, having made the deal, really didn't want to do it, but he wouldn't have backed out of a deal. But he said to me after we'd shaken hands, he said, he says, I suppose you'll want audited financial statements. And if I'd said yes, he would have said, well, that's too bad, then we can't have a deal. So I said, I wouldn't dream of looking at audited financial statements. They're the worst kind, And then Jack said to me, he says, I suppose you'll want me to sell my agencies and to you as well. And I said, Jack, I wouldn't buy those agencies under any circumstances. If I'd said yes to that, that I wanted him to sell the agency. He said, well, I wouldn't be able to do it, Warren. We must have misunderstood each other. So we went through about 3 or 4 of those. And finally, Jack gave up and sold me the business. He was an honorable guy. I mean, because he really, I don't think, wanted to do it. But we met down at Charlie's office at 19th, I think, in Douglas. And Jack was about 10 minutes late picking up this $7 million for national indemnity. He was about 10 minutes late because he was looking for a parking meter with a few minutes left on it. And that's when I knew he was my kind of guy.
But at any rate, this process is not easy. And practically anything where you sit behind that desk and this wonderful deal flow is just coming by, you're in a very dangerous seat.